Hey, this is Mike, and it is Thursday, September 24th, and it is like 4 a.m. in the morning. And this is the preview of the market. Let's see what happened yesterday. The market did not get its follow through day. After the big up day on Turnaround Tuesday, Wednesday just collapsed and collapsed, finishing on the low of the day at 322. One of the things I mentioned in my video yesterday is that the SPY S&P ETF may have to touch the 320 level before you get the bounce back up. So it looks like that is what will need to happen before we get a bounce back up. On the good side, gold, I mean, not on the good side, but gold fell as well. So there's a chance that we may see a bounce today. But I do think that the SPY has to hit the 320 level in order for us to get that bounce. If you look at the 1 month chart of the S&P 500, it's pretty ugly right now. We're below the 50-day moving average. So that means there's just some work that needs to be done. The 50-day moving average is around 330. So that means that the market, the S&P 500, is going to have to move up about 2% before we can get above the 50-day moving average. The NASDAQ, even uglier because tech is just getting hurt all over the place. However, you should probably not feel that pessimistic because this is just, the NASDAQ falling below the 50-day moving average. If you like certain tech stocks, if you like Amazon, if you like Apple, this isn't really a reason to sell. I mean, you just have to hold on to it long term. Apple, Amazon have had an incredible run up. Here's a 6-month chart. Look at this incredible run up. It's going to give back. You're going to have some profit taking. But if you believe in Apple, if you believe this is a company that will be very powerful and dominant 10 years from now, this is just a buying opportunity for you. A lot of people complain, oh, I can't buy these tech stocks. They ran up too much. They ran up too much. Well, here's your opportunity. Here's your opportunity to buy. Apple is still a solid company. Amazon, especially, very solid company. You don't see Amazon falling 4%. So this is a great opportunity for you, especially, we're probably going to get that Santa Claus rally. We're going to still have a lot of buying during the holidays. So if you're looking at to buy these tech stocks, now is the time to do it. Another thing that you can do if you have limited funds is to go out to like December of this month or January and get out of the money, buy out of the money calls and then sell the front end calls. Like so, for instance, maybe Amazon would be too expensive a play, but you can look at the XLK, I believe, is the tech. The tech is, this is like the NASDAQ QQQ, represents tech stocks. It's at 110 right now. You may look at getting like the 120 call in January of next year or December of this year and get like the 120 and then just sell the front end 120 just to get some income until December. That could be a way to go. Now let's take a look at Tesla because there was a lot of talk about Battery Day. Tesla just continues to fall and fall. And the thing is, Tesla just did have a heck of a run up. It was, look, at May of 2020, it's at 156. It went all the way up close to 500. It almost tripled. And now it's fallen. There was reports of a hack or there was a disruption in Tesla's software, and it might have been a hack. Well, here's the thing. If you believe that Tesla is going to be the dominant electric car company, EV car company, this is your gift. This is your chance to load up on Tesla. And if you don't have, you have limited funds, you can buy fractional shares of Tesla on Robinhood and Webull. That's a great thing. Now here's one stock I bought into and it fell, but I'm not worried about it because I believe in this company, is GameStop. Now I sold yesterday the 9.5 put strikes and collected, I think it was 57 cents on each one. But if GameStop falls below 950, I don't mind holding this company because Ryan Cohen, the founder of Chewy, is a major investor in GameStop, and he wants to turn GameStop into the next Amazon competitor. And right now, GameStop is valued at $650 million. If it could be anywhere close to being an Amazon competitor, look, Amazon is a $1.5 trillion company. You can kind of do the math on how far up GameStop can go. Now, this is probably more of a 5 or 10-year project, but people always talk about, hey, if I could have only bought Tesla when it was very low, if I could have only bought Apple or Amazon when it was very low. Well, this is something you should look at. This is a company that has a market capitalization of under $1 billion, and they have someone with a track record, the founder of Chewy. Now, if you look at Chewy stock, this was a company that was founded less than a decade ago. Chewy.com. It was founded in Florida, and it has a current market cap of $22.64 billion. So the founder of an e-commerce company that has a market cap of $22.64 billion is becoming the visionary of a company that has a market cap of $650 million. So if Ryan Cohen can get GameStop to diversify what it sells online and get it to the level that Chewy is at now, I mean, that's a company that has a potential to grow 30 times its size. I mean, that's the potential to be a $300 a share stock. So GameStop is something I believe in, and this is a stock you may want to look into. Also, gold did fall a lot, but if you look at all the spending that's been made by the government with the pandemic, gold is on a multi-year upward trend. It did kind of have this very steep rise over the past year. So having this stock, having this gold give back some of its gains kind of makes sense to sort of smooth out this rise. But I think the 2020s is going to be the decade of commodities, much like 2000s. I think if you want to look at how the 2020s are going to perform, look at how the 2000s performed. So a big run up in commodities, tech stocks rose, everything else was pretty much flat. So my focus is for the next 10 years is going to be tech stocks and commodities. And I think everything else that's not a tech stock or a commodity is going to have some issues. So I'm avoiding like healthcare, insurance, like luxury goods. I think luxury goods could have a problem going into the next decade. So that's where I am with the markets. I think Thursday today, we just have to see if we get that bounce. We are still in the last week of September is historically the worst performing week for equities. So it should be no surprise that things are pretty rough right now. But I do think there's going to be a light at the end of the tunnel with the end of the year. Usually we have the tech rally. So I think there's stuff to be positive about. If you want to acquire shares, this is the time to do it while everything is down. But I think things will get better. The chaos in the election, I think, has been baked in. We probably will have a second wave in the coronavirus, but that's probably months away from that specifically affecting the stock market. In fact, I'm going to do a special report this weekend on how I think 2021 is going to be an even rougher year for the markets than 2020, because I do think we're going to get that second wave. I do think that the government is not prepared for it, and I do think most of the public is not prepared for it because they think, oh, the worst is behind us. We're going to reopen everything we had. I think I just saw some news. Indiana is having what's known as a stage 5 reopening, where they're just reopening everything. And I just saw some news that the Super Bowl is going to have full capacity for its game. And so, here's the thing: pandemics, they don't work on your timeline. They'll mutate and do whatever they want. So that's something to look at. So be sure to check that out this weekend. If you enjoy these videos, I do them before every market open, Monday through Friday. Be sure to subscribe and turn on notifications so you can find when these videos come up. Okay, thank you very much. Bye.